All right, today is May 1st. The markets have opened essentially flat here this morning, a little bit mixed, not a whole lot of movement here this morning. Before we get started here today is the first day of May, which means today is the first day that you can bring your unwanted and unneeded documents to our office, and we will take care of shredding them for you. What documents should you keep? What documents can you toss? We put together a handy keep it or toss it guide to help you. You can get a complimentary copy of this guide at our website, investwithccg.com. There's a picture from last year's shredding event. So again, feel free anytime during the month of May to bring your unwanted and unneeded documents to our office, and we will take care of properly shredding them for you. With that, I will roll today's intro. We'll take a closer look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Strong earnings from several mega cap technology companies offset renewed regional banking jitters and weak economic data, leaving stocks higher for the week. The Dow Jones Industrials Average gained 0.86%, while the Standard & Poor's 500 added 0.87%. The NASDAQ Composite Index rose 1.28% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, lost 0.6%. It was a very busy week of earnings reports, but none more important than those from the big tech names. After 2 days of sharp losses on revived regional banking fears and otherwise lackluster earnings results, stocks rallied powerfully on a succession of positive earnings surprises from several mega cap companies. Also aiding the sentiment was last week's first quarter gross domestic product, or GDP, report. Though the report showed muted economic growth that fell short of expectations, investors were encouraged by strong consumer spending. In a sign that higher rates are slowing economic growth, first quarter GDP slowed to a 1.1% annualized growth rate as healthy consumer spending helped offset a decline in business investment and a slowdown in non-residential investment. Economists had expected first quarter GDP growth to come in at 2%. The business inventory investment slowdown reduced the headline GDP number by 2.26%. The initial estimate of GDP also reported some disappointing inflation news as the quarter-over-quarter Personal Consumption Expenditures Price Index, which is the Fed's preferred inflation measure, rose 4.2%, which was higher than the 3.7% forecast. As always, we will keep our finger on the pulse of what's happening and will automatically make changes in your managed accounts as we feel are in your best interest. This week, we are watching today the Institute for Supply Management Manufacturing Index. Tomorrow, we have factory orders as well as the Job Openings and Turnover Survey, or JOLTS, if you've heard that acronym. Wednesday, we have the FOMC announcement, as well as the Institute for Supply Management Services Index. And then Thursday, we have jobless claims. And wrapping up the week on Friday, we have a look at the employment situation. We are in the middle of earnings season, as I mentioned. Here is a snapshot of some of the companies reporting earnings this week that we are also keeping an eye on. So again, if we are not managing your life savings for you, I invite you to learn more about our personalized approach at smartmixportfolios.com. You can also now go to that website and click on any one of the different individual strategy names, get a full report on performance, risk, volatility, et cetera, et cetera. So have a look at that if you are interested. All right, shifting gears here a little bit, I wanted to take a moment to update you on the potential changes to Social Security benefits for 2024. So if you or a parent are currently taking Social Security, I wanted to just provide a kind of an early update here for you. As I'm sure that you know, the Social Security Administration calculates annual cost of living adjustments, or COLA, based on the Consumer Price Index and inflation. However, recent projections show that as inflation starts to subside, the COLA for next year, for 2024, may be less than 3%. That's a drastic drop compared to the past 2 years. Social Security beneficiaries saw a 5.9% bump in 2021 and a record-setting 8.7% increase in 2022. This projection is very much an early assessment. Gauging the increase for 2024 will be clearer toward the second half of the year, but I wanted to make sure that you were aware of this potential change as you make your own personal financial planning decisions. Remember that even with a possibly smaller COLA this year, cooling inflation may also help create an even stronger economic environment overall. And as always, I'm here to answer any questions about Social Security benefits, your portfolio, or anything else that you want to discuss further. Speaking of Social Security, last week I did a deep dive into things that you want to consider before you elect to start receiving it. The recording is now available on our website, so you can head on over to capitalclassroom.com. And if you have not yet taken your Social Security or are within 5 years, I invite you to go and particularly go and take a look at that recording. For a married couple, there are more than 80 combinations of how and when you take your Social Security income. One, of course, is the best. One, of course, is the worst. And I want you to get everything you deserve. So head on over to capitalclassroom.com today. All right, that is it for this week's update. Thank you for staying until the end. I do have another riddle for you. Remember, be the first person to post the correct answer down below this video, whether you're watching on Facebook, on LinkedIn, on YouTube, or on Twitter, and we will send you a gift card for coffee on us. For clarity, to receive the coffee card, you need to be the first person to post the correct answer in the comment section below this video. All right, so today's riddle is: two sailors stand on opposite sides of a boat. One looks west and the other looks east. Yet they can both see each other clearly. How can this be? Again, be the first person to post the correct answer down below this video, whether you're watching on YouTube, Facebook, LinkedIn, or Twitter, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, you can head on over to our website /riddles for those. And then lastly, later on today, I will be sending out our full economic update. Comes out at 3 p.m. Central Time. This week includes a frequently asked section on taxes again. So if you have any tax questions, there's a great section in there on taxes. So if you're not getting this email and you would like it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.